Learn how a junior trader from our desk made one bad trade in our new trader education video series.
Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
See how a junior trader absolutely had the right idea about where a stock was headed, but still lost money because of poor entries and exits. Let's dive in.
So this is my trade yesterday in Novavax. It's the anti-playbook that you asked us to put together. This is the VWAP retracement trade in a low float stock that's gotten overextended over the last 2-3 months.
The anti-playbook trade is something that we're trying for the first time ever. So there have been lots of people who suggested that we actually do this, and I know that a lot of people do this in their head or on the side, but really this is the first time that we're actually doing this internally and sharing it with each other. And the idea is there's a couple different ways to get better, but one of the significant ways to get better is to understand trades that you do not trade well and to internalize that, to put them down in variables, to create, as you say, an anti-playbook for them. And then there's bad trading. There's taking maybe trades in your playbook, but not necessarily executing them well or flubbing them a little bit. But the idea is the way for us to get better as traders is, yes, to build from what we do well, to build a playbook, to understand what our A+ trades are, to grow from them, but then also to understand what's keeping us back. And if we could just eliminate or get better at eliminating the trades that we don't trade well, the trades we just shouldn't be taking, or we should just be getting rid of them. We should rid them from our results. We can make significant progress. And so this is our first step at seeing what that's like internally and then seeing how that can help us. So, all right, NVAX, what do you got?
So bigger picture, we obviously know what happened with the actual SPY. We had that aggressive sell-off of V-bottom, and a lot of people trying to short the pops on the way up. You have people like Unlock and everybody saying that we're getting super overvalued and everything like that. But there was really no retest of the lows like everybody was expecting, which kind of created almost an environment where shorts were getting trapped in this, trying to short a bear market rally, which is one of the toughest things ever. And we started to consolidate the prior days into kind of a range. And we were actually gapping up on this day in the actual SPYs on news of a vaccine. So just some of the intraday fundamentals to Novavax. I'll get to the chart after, but it's a late-stage biotech company focusing on the development, commercialization of vaccines. So basically, a lot of people were betting that this stock, I consider it a low float. The float is about 50 million, though. They were basically betting that this stock was going to be, or this company was going to be the one that actually cured the virus, the coronavirus. So they basically had that a first initial leg up. A lot of people were shorting in here like the 20s and everything like that. Then they came out and had earnings on this day where they actually announced they were getting funding from a nonprofit that originally invested about $4 million, but they were investing initial $384 million, which is the biggest factor in this. And then after that, we kind of consolidated in here, a lot of shorts. This is becoming an extremely crowded trade, shorting these low floats, especially with so many new accounts opening up. And basically what happened was we kind of just consolidated. We didn't get that real crack down to $40. And then about 3 or 4 days after the earnings, we gapped up on, it was like an upgrade from, I think, like B. Riley, just some lower tier firm. And we really had a run up. But the biggest thing for me that that got me interested even more so in the short was kind of just the volume dying off. Obviously, we had a ton of volume almost every single day. The flow was being exchanged. But you could see compared to like the day of the earnings, the volume's really starting to die off. So I'm starting to think maybe this thing's losing steam, just losing buyers. And that's kind of my fundamental thesis behind it. This is the first day, the original day that it gapped up. You could see that it kind of popped and just held this VWAP area. So what I like to do on these low floats is I like to wait for it to get below this area to start like a really higher time frame unwind. And that's where I would use like my playbook for like VWAP retracements and all of those playbook trades that I use when they get below a significant intraday or daily level.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
The actual setup here, how I trade it is, I really just look for the unwind zone to kind of break. It gets below that $56, $55 area. You see some real volume come in. And then it bounces back into VWAP. And when I fade things into VWAP, I kind of like to wait for sellers to take control. So for me, I define that as kind of just breaking the trend line and making a significant lower high, which you could see it kind of did in here. This is really the first signal that sellers were taking control back into VWAP, which is how I like to put on a VWAP retracement for a trade to hold.
So when it makes a lower high, Kyle, that to you signifies that the sellers are in control?
Yeah.
Can
Sometimes,
you show that again on the chart?
Yeah, it's right in here. So you could see it bounces back and then it has a trend line coming up into VWAP. And then once you really start to get that first consolidation and then a lower high put in right around here, that's where I really start to think the sellers took back control into VWAP. And that's where I like to get involved.
And that strikes me as a trade decision by you. So other traders are going to short based on price into VWAP. A certain type of traders are going to, when they see the weakness, when they see the breakdown, when it pops back up, they're just going to short into the pop. They may be even scaling into VWAP. That's one strategy you can make into becoming a successful backside trader. And then other traders, what they do is they wait for it to come near VWAP and they hone in on the tape. They are highly attentive to the tape and they look for the sellers from the tape to be in control. And when they start to see the sellers in control and it's below VWAP, after the breakdown into the retracement, near VWAP, when they see the sellers winning on the tape and it confirming on the tape that we're more likely to go down, boom, they're going to hit it hard and be really aggressive. And what you're doing here is you're saying, well, I'm the type of trader that wants to see it show me the weakness near VWAP. I'm the type of trader who wants to see technically, based on my technical analysis skills, that it's showing me the weakness, which is great. And I'll wait for that. And that's going to be my signal. And I would assume you're going to cover that against the top or above VWAP and give that a run based on a technical entry. That makes sense? Is that a fair description of what you're looking for?
Yeah, definitely. I've tried kind of fading into VWAP, but it just doesn't work for me. I really like to see the actual turn get put in before I like to get involved. So here are my actual trade executions. This is a 2-minute chart, but so like I said, as soon as I start to kind of see the turn, I start putting in kind of feeler positions, risking like a hold above this level. And then when it actually confirms, you see a little bit spike in volume that lower high, I like to put on my full position.
Your exit is a hold above view up.
Yeah.
Is it your exit a wick above view up, or it's a price and time above view up?
No, it's not a wick of a view up. It's more of like a price and time. So I'll like kind of like watch the wick. I usually take off at least half of my ad over the lower high if it holds above that, and then I get totally flat. So I'll usually like let it wick. I'll see where it wicks up to, how that's being reacted to relative to the regular price action. If the wick is like super extended, then I might just cut it. If it kind of just wicks up for a couple seconds and then comes back under, I'll probably keep it.
So your thought process there is, I'm going to cut at least half of it because the thesis is if the trade's going to work, it should work right away. It's not working right away. My entry thesis isn't as correct as I thought. Let me cut half. Let me get out of the hole if it's holding above view up. Is that how you're looking at it?
Yeah, exactly. And that was actually part of my mistake in this. I got down to half on this wick up here when it really never showed that it was holding up in here in this area. Like I said, I really need to let it show me that it's holding above like this $56 area to get out of that half position, that full position that I'm taking out. And then I realized that I messed that up, so I hit in, and I got back to full size, and it kind of ruined my price. So I ended up just having to get out of that, and that was kind of just a mistake that I've been making recently.
All right, let's talk about that. So,
yeah.
And that's why I asked you about what your exit is, because, look, some people are going to say, hey, I'm going to get out just based on price. And some people are going to say, no, my exit is price and time. And you want to know which one what your reason is for how you're getting out. If you're going to be more of a swing trader, if you're going to be more of a selective trader, price and time is a better way for you to get out. I think a couple other things that you want to be thinking about in this trade as well is it's crowded, right?
Yeah, it's definitely super crowded.
Yeah, there's lots of people trading this, and part of what you need to sign up for your swing trade is how you're going to deal with a wick that may mean nothing. Are you going to save some risk allocation for if that happens? Are you going to, upon entry, be a little bit smaller and give yourself a little bit more of a stop because it's crowded and it can be wicky? Also, there's high short interest in this name. It's also in a sector that everybody's trading right now, that a lot of people are trading right now. I shouldn't say everybody's trading right now, that a lot of people are very interested in right now. Hot sector. And so, and it's done really well for a while now. So you've got people who are going to try and support it and keep the stock up. So you want to be thinking about that going along. And so, yeah, I mean, an example of you not trading at your best is you not sticking to your exit plan, which is time and price, not just price.
Yeah.
And look what it can do. I mean, you got out of a position, and a position of strength, right? And a position you really like, and a trade that was really working, and then you got back in at a bad price, and because you got in at a bad price, you had to take yourself out, even though the overall idea was still working. Tell me what you do a little bit later.
So usually what I like to do is I like to take this as a more of a swing position, and then I like to take a momentum lot when I actually see the real breakdown in these. So I was kind of eyeing this like $54.50 area. It's been bouncing in there a couple times, so I was trying to get involved for a momentum lot in there. But I think because I realized that I wasn't really making as much as I should have because I screwed up the initial entry, I was kind of hitting the momentum lot and really keeping my stop way too tight. For the momentum lot, it should be like a hard stop above here and like a soft stop, like a hold above this $55 area, which you could see it never spends more than like 30 seconds above it at all. So I actually took two small losses in this area when it was just kind of in a range from my momentum lot. And And then I finally did get the momentum lot. I covered into the flushes. I like to get flat basically into the low of day on the momentum lot unless it's below the low of day.
So again, you take a couple of stops right there because price is giving you a signal to exit, but not price and time. Is that fair?
Yeah, no, definitely. That's definitely accurate. Especially
Yeah, and look,
because
you've been trading really well, and you've been doing a really good job being very selective in your trading, and you've been trading really strongly relative to your experience and your class. Doing really well. And so, one thing I would ask you to think about: I don't want to change the way that you trade. And if this is too disruptive to the way that you trade, just scratch it and move on. But the way I look at this trade, particularly the type of trader that you are, it strikes me as I understand how you want to enter with the momentum for something that's working and sort of hit new lows, but you're hitting the momentum, you're hitting the new lows because you are saying that's confirming more so that I'm right. And I understand that trade. But when I look at that chart, and when I look at where that chart is on the daily chart, and when I think about how much it's run up, and when I think about the trade you're trying to make, and when I see the large down move after the open, and I see the volume in that large down move, and I see the stock unable to get above VWAP, and I see it trading cleanly down after it fails to get above VWAP. Those are also signals and signs, particularly based on technical analysis, that this stock is likely to trade lower. Those are lots of signs, those are lots of technical signs that today this is going to trade lower. And so that can be enough for you to be adding to your short when it's still hovering below VWAP and time passes. And so you can look for the tops of consolidation areas below VWAP over time as time passes, and short those tops, short the tops of those ranges, as opposed to hitting only the new lows. And so that is a way that people look at this is, look, if it was going to turn around, it would have turned around by now. It hasn't. Time has elapsed. It's less likely that it is going to turn around. Therefore, it's showing me more technical reasons. It's showing me more technical weakness, so I can add risk because time is showing me that I'm more right than wrong. And so as time goes by, as I said, and as you find those areas of resistance below VWAP, you can think about exchanging hitting new lows for shorting those highs and adding to your swing position. Or you can think about doing both. Or, of course, you can just say that doesn't work for me and keep doing what you're doing. But I do think, I understand what you're trying to do by hitting lows or peak lows, momentum lows with the trade. But I'll give you that to think about.
That's definitely something I've been working on, and I do have the habit of kind of ruining my initial swing trade with these momentum lots. So that's definitely something I could take into account when I do develop these. And then, just to finish the trade, I like to take out the momentum into the low of days when I see the tape start to turn a little bit, and then I typically get flat my swing trade, or at least the majority of it, depending on how it is. This trade, like you said a couple of times, is super crowded, so I just got flat once the initial trend down breaks and it makes a higher low right in here. I just started bidding out of my swing position. Yeah, that's how I traded it. So just for the review, I noticed the last like 2 or 3 weeks, I after I started seeing a little bit of success, I really started like tightening my stops, not giving things the full risk that they deserve, almost in like fear of giving back what I've gained in the last like 2 or 3 months, which definitely hurt me. So I think the biggest takeaway that I have from this is I just need to trust my system, develop more of a system for defining what would be like a timed exit in that price, as opposed to just getting out if it wicks up, especially in a name that wicks around like that so much. And when I do make a trade mistake in the middle of my trade, I can't just immediately get back in at worse prices like this. That's something that I do sometimes as well. You know, I'll get out and then it goes back in my way, and I realize I never should have gotten out. And then I kind of just get like end up getting chopped around in a range for a little bit, which I think just goes back to trusting my original entry and the system I've developed.
Now, I just think you need to think about one more thing, which is in a stock like this that's so crowded and volatile, another advanced technique that you probably are going to need to learn how to utilize, especially when you get bigger, is you're probably going to need to take stops based on price, or at least a big portion of stops based on price, and then watch what it does when it takes you out on price. So you're going to have to get to the point where you take it off, or you take some of it off, but then recognize whether or not it's a wick, just a temporary price spike, or it's a change in direction. And particularly when something that's really crowded, particularly in something that's a backside trade, particularly in something that's been up so much, you're going to have to be able to take it off and then quickly see that it is a wick high, put it back on against the high wick, and be in it if it's going to go down. Stop out above the wick high, obviously, if you're wrong. But that's something for you to be thinking about, and that's where your tape reading skills come in handy. That's where your open-mindedness comes in handy. And again, that's a pretty advanced concept, so we'll get to that in time as you continue to do better. I apologize for making you go first, showing one bad trade, but I will stipulate you're doing very well, and so we purposely had you go first since we thought you could handle it.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at SMB, train and trade well.